Okay, picture this. You're watching the news and you catch this super celebratory segment about the stock market hitting yet another all-time high. But you're watching this right after stepping out of the grocery store where you literally just paid $60 for two small bags of bare essentials. It's a deeply frustrating disconnect, isn't it? Wall Street is absolutely thriving, investors are popping champagne left and right, and yet checking your own bank account feels like you are barely treading water. Well, welcome to this explainer. Today we're going to unpack exactly what is going on here and explore what we call the paradox of American prosperity. So, what does this all mean? It really boils down to the central mystery of our time. If the economy is supposedly doing so amazingly well, why do so many of us feel flat out broke? Why does a period of massive, record-breaking economic growth feel almost indistinguishable from poverty for the average household? We're going to dive into exactly why those record-breaking stock market gains simply don't translate to everyday financial success for millions of hardworking people. All right, let's jump right into section 1, the great economic disconnect, growth versus reality. You know the drill. On one hand, the daily headlines are just boasting about record stock highs, a booming Wall Street, and these billion-dollar tech companies getting even more massive. But on the exact opposite side, reality paints a very, very different picture. Groceries are noticeably more expensive. Rent just keeps rising every single time a lease is up. Auto and home insurance costs are climbing steadily, and national credit card debt is literally breaking records. So despite working 40, 50, or even 60 hours a week, it feels harder than ever to actually get ahead. It's a jarring juxtaposition. Moving on to section 2, stocks aren't the economy. Stocks versus reality. We hear this phrase all the time, right? Stocks aren't the economy. And it's true. When the stock market goes up, it simply means investors believe major corporations are going to generate higher profits in the future. That's it. It absolutely does not guarantee higher worker wages or cheaper goods or more affordable housing. So to really visualize the invisible economic forces at play here, I want you to imagine a typical neighborhood made up of exactly 100 people. Now, in our little neighborhood of 100 people, just 10 individuals hold almost all the stock wealth. The other 90 people, they own very little, or honestly none at all. So if the stock market suddenly doubles overnight, those 10 specific people become dramatically wealthier on paper, and the total wealth of the entire neighborhood skyrockets. But those other 90 people, they experience zero change in their daily lives. The neighborhood is technically richer, for sure, but almost everyone living in it is dealing with the exact same reality. And actually, scratch that. It's not even a hypothetical neighborhood. The reality is that the top 10% of earners own over 90% of all stocks and mutual funds in the country. Because this ownership is so incredibly concentrated at the very top, when the market reaches these unprecedented record highs, the resulting financial benefits are inherently kept right within that small circle. Okay, let's look at section 3, the inflation illusion, rising costs. Let's say you get a 5% wage increase at work. On paper, hey, a 5% higher income sounds incredible, right? It feels like real progress. But then, over a couple of years, rent jumps by 8%, and basic groceries surge by 15%. Throw in rising insurance premiums, higher utility bills, and skyrocketing childcare costs. All happening at the exact same time, suddenly that 5% raise is completely swallowed up. You are technically making more money than you ever have in your life, yet you are somehow falling behind. Economists actually have a term for this whole shebang: real purchasing power. And it's absolutely crucial for understanding why so many households feel completely broke. See, people don't judge their financial health based on the raw number printed on their paycheck. They judge it based on what that money can actually buy in the real world. In fact, recent data shows that for a lot of middle-class families, real purchasing power has just flatlined or actively declined over the past few years, despite that nominal wage growth. Which brings us to section 4, the housing hurdle, locked out of wealth. For previous generations, getting a manageable mortgage was just this reliable, foundational tool for building long-term wealth. Homes were historically priced at a fairly reasonable multiple of the average local salary. But today, that reliable tool has transformed into this massive, towering obstacle. Skyrocketing listing prices, combined with significantly higher mortgage rates, make simply scraping together enough cash for a standard down payment a monumental hurdle for the average earner. And man, for younger generations, this creates such an incredibly frustrating daily reality. Imagine going to work every single day, doing everything right, and just watching home values in your city rise year after year while you are stuck renting. The national economy might look wonderfully strong in those shiny corporate reports, but from your perspective, you are completely locked out of a crucial financial asset. The traditional dream of homeownership feels like a moving target that just keeps accelerating further and further away from you. Let's move on to section 5, the hidden debt trap, the leaky bucket. Carrying multiple forms of debt has somehow just become a completely normalized part of everyday life. We're talking student loans, auto loans, credit cards, medical debt, and personal loans, all stacking right on top of one another. American households now hold over $17 trillion in total consumer debt. $17 trillion. It is a compounding, largely hidden financial burden that forces millions of people to essentially run on a treadmill just to service the interest.
So think of everyday debt like a literal leaky bucket. Even when your income finally rises, a massive chunk of that new money instantly drains out the bottom to cover those mandatory monthly payments. No matter how much water you pour in at the top through your hard work or promotions, the bucket never actually feels full. So instead of feeling wealthier when they earn more, people just feel trapped in this exhausting cycle of servicing past expenses. So, when you combine the reality that stock market wealth is highly concentrated, with an inflation illusion that actively eats away our purchasing power, a housing market that locks out new buyers, and the leaky bucket of compounding debt, you're left with one final, deeply provocative question. Is economic growth really growth if it feels like poverty? The top-level economy may be breaking records, but understanding these invisible forces reveals exactly why the average household feels left behind. Thank you so much for joining me for this explainer. I really hope it gave you the clarity to better understand the economic world we're all navigating.